Good morning and welcome to our Freddie Mac webinar. Please let me introduce the president of CAMP, Ms. Audrey Voicino. Audrey?
Thank you, Megan. Good morning, everyone. How are you? Say hello to Kevin Casey, our president-elect for CAMP. Thank you, Megan, for all your help as always. And just wanted to remind you that tonight at 5 p.m. we are going to be doing our CAMP happy hour, brainstorming mastermind. You know, share your thoughts, your loans, your ideas, get some ideas yourself at 5. So you can drink whatever you want, eat whatever you want, because we'll be on the camera. And just as always, you can put your questions in through the chat bar, and then we'll take those at the end. So without further ado, I am so excited to introduce Tony Hutchinson with Freddie Mac. He is the Director of Government and Industry Relations. I was just telling him what a lofty title I thought that was. So he is a wealth of information. So we're really excited to have you, Tony, and take it away.
Thank you much, Audrey. Thank you, Kevin, for having me. It's a pleasure to be here, and it's a pleasure to share with you what Freddie Mac has been doing related to the COVID outbreak. For the next 30 or so minutes, I'm going to talk about our response to that, and then, as Audrey mentioned, I will take your questions toward the end. What I'm going to mainly do is talk about the forbearance plan that we put in place. I'm also going to tell you some of the messaging that we're pushing out to the market space to try to help people manage with this pandemic, and especially manage through some of the loss mitigation that we're asking them to take on. The other thing I'm going to do is try to share with you a little bit of our thinking, why we were doing that, and then some resources toward the end that you guys can utilize to keep up with the changes that are being made with us, as well as the industry, and then answer some questions that you may have. Hopefully you guys will be a little bit gentle with me. I know Audrey knows I'm a strong dude and I can handle anything, but every now and again, it's nice to be handled a little lightly, if you don't mind.
Come on, don't be a wuss, Tony.
Anyway, hopefully you guys will get something out of this and enjoy the conversation. I'm looking forward to it. So, and here we go. So it's really interesting. When the whole pandemic broke out, we didn't have the CARES Act. Our regulator, along with our sister organization, Fannie Mae, sat down with us and said, hey, we need to do something. So one of the first things we did was we said, hey, look, we need to offer folks some level of ability to postpone, put off some of their payments, because we know, based on natural disasters that we've faced, flooding in the central part of the country, earthquakes, fires, landslides in the west, and then hurricanes in the Gulf area and along the East Coast, that when you have something that is going to push, prevent people from working, reduce their income, we're not going to be able to get some of the payment streams that we normally get. So we wanted to figure out, okay, so how do we relieve some of that pressure? And then who do we relieve it for? So the quick answer was, yeah, we can, anybody who's impacted by COVID, we can go ahead and offer them some relief. So that would be anybody whose company closed down because the job can no longer function, so they get no more income. Or maybe somebody got sick and now they're hospitalized and they have to figure out, their families have to figure out some payments there. Those were the obvious ones. The ones that quickly came to mind that we had to deal with were people who were indirectly impacted by COVID. And we hadn't really thought about that beforehand, but once we really started going down the road, that was the one, it was that group of people that really stuck out to us. And that would be folks who all of a sudden had to stay home and take care of their kids. They couldn't work because there was now no daycare, or the school systems were closed and they had to mind their children. Or someone did get sick and couldn't go to work and they had to stay home themselves and help mind that person. So we sat back and said, okay, let's figure out what is the group of people that we really want to help here. And we quickly determined that we wanted people who were directly impacted and those who were indirectly impacted by this disease. Saying that, we threw that out there, and then Congress comes out with the CARES Act. And the CARES Act effectively said the same thing. If you're indirectly or directly impacted by this outbreak, that we're going to provide you some level of relief. The first thing we realized was that the Congress's rulings, their law was slightly different from what Freddie Mac, Fannie Mae, and our FHFA had put forward. So we immediately made sure that everything that was codified in law met our requirements. We moved right up to that line. So everything that's in law, we're doing. So we've taken care of that. Now, why do we think that we needed to step out and take care of that? We thought that we needed to step out and take care of that because the one thing that we really didn't want people to have to worry about, with everything else that they had to worry about during this, and we've learned this through a lot of the hurricanes and a lot of the natural disasters, is we didn't want people to worry about their shelter. And in particular now, where the government was telling you, you need to shelter in place, we didn't want people to feel that extra stress of how am I going to make my mortgage payment? How am I going to make my rent payment so that I can shelter in place as I'm being instructed to do? So we figured that if we could just get that off of people's minds and let them focus on taking care of their health, taking care of their families, then we would help society move in a positive fashion throughout this pandemic. And that was that's been our motivation since the onset. It continues to be our motivation now. So we've matched all of our guidance related to any loss mitigation that people can utilize to the CARES Act. And we've gone a couple of steps further. One of the first things that we did after we matched the CARES Act was we decided that in order to really effectively tell people they don't have to worry about their shelter, we know they have a reduction in income. We know that they may not be able to make their mortgage or their rent payments. The first thing that we did, we told everybody that if you don't make any payments, you're not going to be foreclosed on during this time of natural disaster. You're not going to be evicted during this same period of time. We're going to set up things so that you can figure out how to get yourself caught back up. We're going to try to push as much information out about that, but you are not going to have to worry about your home. So that's what we did. No suspensions, no foreclosures, no evictions. And we've made every tool in our arsenal that is available during any natural disaster, we've made that available nationwide. So it's not just forbearance, which I'm going to talk about because that's the focal point of the CARES Act, but it is loan modifications, payment deferrals, everything that we've made available to people in the past to fight a natural disaster is available to everyone out there right now who has a mortgage backed by Freddie Mac. The same I can say for our sister Fannie Mae. If there's a mortgage backed by Fannie Mae, then every tool that they've had available during any natural disaster is available right now to help families and consumers mitigate the situation. And aside from that, I keep trying to remind folks, we're still open for business. So even the normal tools that are available for people if they need to refinance, if they're current and they need to refinance, we're still open for business for that. So you can still utilize our full complement of tools in the marketplace to help assist any customers that come your way who are looking for some level of help during this time of natural disaster. So again, we did this for everybody who was impacted directly or indirectly. Now, in the past, you usually had to go through some level of documentation if you were going to take advantage of some of the loss mitigation tools that are out there, in particular forbearance. That is the one product that the CARES Act says you don't need any documentation for. If you need to take forbearance on your mortgage payment, you just need to call your mortgage servicer, tell them that's what you want, and that's what you get. And we'll go over the process of how long you get in a minute. But the one thing that we've been telling folks, and we've been telling our realtor professional friends, our home builder friends, all the mortgage folks that we speak to, and all the housing counselors, is we recommend that if you do not need to take forbearance, if you can still pay your mortgage, to pay your mortgage. We don't want people taking advantage of this option if they don't have to, mainly because there are ramifications on the back end, as I know all of you guys know. So aside from telling people only to utilize this if necessary, we've also been telling them that if you're thinking about utilizing this option, talk to your mortgage servicer. They are the experts out there in all the products that are available, and they can help you determine if a forbearance is what you need, or if there's some other option that you can utilize that doesn't offer the same level of ramifications as a forbearance. So we've been telling people, we've been doing our best to push that out there. One, take forbearance if you need it, but two, know your options. And we've been touting the fact that servicers out there have set themselves up so that they can speak better, quicker, more easily to the consumer. And as many of you know, we've provided scripts to a lot of our servicers so that they can walk people through the different options that are available to them. Now, by no means does this mean that if you're looking for forbearance, or if a consumer calls up and says they want forbearance, that they have to now fill out some documentation or jump through a few hoops in order to get there. What we're asking is that we try to speak with them so that they know all of their options. But if they say that at the end of the day they want forbearance, they get it. So what borrowers are able to take advantage of this? And this is something that I didn't realize a lot of people didn't know. So obviously, if you have your own primary residence, you can take any level of loss mitigation on your primary residence. That makes perfect sense, right? We want you to be able to shelter in place. But we've also made it available to people who have second homes and investment properties. So folks will always ask, well, why would you do that? Why would you open this up to investment properties and second homes? I mean, we want to make sure that the people who need this take advantage of the loss mit here. Well, the reason that we do that is for a number of reasons. One, usually in an investment property, people have tenants. So if they aren't able to pay on their investment property mortgage, we don't want that to be foreclosed upon, and then those tenants put out or have to worry about being put out. So we were offering some level of relief there, focused on those properties. So that way we can, again, remove the thought of shelter from your mind, so you can focus on the things that are important right now. So that makes perfect sense too when you sit down and talk to people, like, I get that. Well, why second homes? Why would you want to cover second homes with this? We sit back and think, if folks live in a very populated urban area and they have a second home, maybe they don't feel comfortable where they are. And for them to feel comfortable and to be able to shelter effectively in place, they want to get away, go to their second home, which is in a less densely populated area. And that's how they can feel safe and secure during this time of crisis. So we want to make sure that's available to them. And that's why we covered second homes as well. So we've opened this up to anybody who's directly impacted, who says they're indirectly impacted. We want people to make sure that the hardship is legit for themselves, that they can't pay, that if they can't make their payments, they take advantage here. If they can, continue to pay, but definitely speak with your servicer so you can understand the options. And if you have investment properties, your primary residence, or your second home, it's all covered. So again, the bottom line is we want to make sure that everyone is well taken care of. So what does this mean in terms of forbearance? So in the CARES Act, it effectively says that consumers can call up their servicer, say they want forbearance, no documentation needs to be filed. They say they were being impacted by COVID. What does that mean for them? It means that when they call up, that they get exactly that. Hey, I need 1 to 6 months of forbearance. Okay. And then the servicer says, all right, well, we will begin your forbearance straight away. If they need an additional time period of forbearance at the end of their forbearance period, they can pick another 1 to 6 months. So effectively, they can get up to a year of forbearance. The other message that we are telling consumers, and this is why we want them to speak to servicers, because this is one of the funniest things that popped out of this. It's funny to the extent that you laugh when you think about it, but the fact that people were believing this is a little disturbing. We are continuing to tell people that forbearance is not forgiveness. If you take 1 to 12 months of forbearance, those payments are not forgiven. At some point in time, you have to be made whole. The people who lent you the money so you can purchase your property need to be made whole. And that's why we want the consumer to speak with the servicer so they understand how they're going to have to catch up on the back end, or they understand the avenues available to them to do that. So it's like I said, it's not funny, but it is when you think that some people thought that, hey, I get a year of not having to pay my mortgage and I'm never going to have to pay it back. No, that was not the intention, nor is that what is being done in the marketplace. And that's why we want consumers to be well educated and speak with you all when they are contemplating taking some level of loss mit or forbearance during this time of crisis. One of the other things that we've done, if people do take forbearance, or there is any level of loss mit where some of the payments are going to be missed, or not all the monies will be paid, associated with that are usually penalties and late charges. Well, if we've decided that we didn't want to impact people harshly, we didn't want people to contemplate their mortgage or worry about their mortgage during this time, when we wanted them to focus on their health, and we wanted them to focus on maintaining a level of safety and shelter in place, then why would we charge them late fees and penalties? We decided that during this time, as long as we have this national crisis on our hands, that we're not going to charge anybody any late charges or penalties should they ask for some level of loss mit and have to reduce or miss their payments. We just didn't think that that made a lot of sense, that on the back end, after they've missed payments and they're trying to get themselves caught up, then they'd also have to pay us additional fees because they were late. That's just an additional burden that we did not want to impose on the consumer. So all of those are wiped off the table. And again, like I said, we've made the whole arsenal of every loss mitigation tool that we have available to every consumer out there. They just need to sit down, talk to the servicer, look at their situation, and then move forward. So again, the message that I want you guys to hear from us is that we definitely, without a doubt, don't want people to worry about their mortgage. We want them to shelter in place as they've been told. That's it. We can talk about mortgage some other time. We need folks to be healthy. We need them to be safe. We want this pandemic to end so we can go back to work and things can begin to pick up. We want the housing economy to continue. We also want to make sure that nothing happens so that it impacts the housing economy to the point where it might slow down significantly or stop. So we want people to maintain a level of confidence. We also need to make sure that people know that every tool that's out there is available, because we're still open for business and there are options for them. They don't just have to ride the forbearance train. There's a number of different options out there. So we want them to work with their servicer, talk to their servicer, figure out what those options are. But forbearance is the thing that everybody's been talking about in the marketplace. And this is just it's our forbearance plan, if you will. It's our waterfall that we put out. It's been effective since April. This is the one that we put in place specifically for COVID. Now, the one thing that I will point out to you is we've always had forbearance plans. This isn't new. Like I said, anytime we had a natural disaster anywhere in the country, you had the ability to take forbearance. But you also had the ability to do other things with your mortgage. The reason that we've come out with a COVID-focused plan is because coming out of the CARES Act, there was all this conversation and there's language in it that specifically spoke to forbearance. So on this slide, one of the few things I'll point out to you is under borrower, what you'll notice is that there was already in place options if you lost employment, had a reduction in income, or for whatever reason, the cost of your housing rose significantly, that became a hardship for you. So you could always apply for forbearance at that point in time. The key is you had to apply for it, you had to document it, and then the lender, the servicer, had to accept it. Now, if you take a look under eligibility, what we've done is we've stuck in there, it just says hardship COVID-19. It just means that it doesn't matter what has impacted you. If you call up and say that you're impacted by COVID-19, you don't have to provide any documentation. You just need to say that you're impacted. You can avail yourself to the forbearance plan that we've put in place. But again, we're asking people, before you do that, you need to talk to your servicer, because there are issues that come with it. We know that we can take as much time from 1 to 6 months to start, and then we can add another 1 to 6 months on the back end. We know that we've been telling people that that is no longer forgiveness, that it just means that you are forbearing your, that you're just forbearing your payments. But you also need to know, how am I going to prepare myself to come out of this on the back end? What does this mean for me on the back end? So a couple of things that occurred about 3.5 weeks ago, and I don't know if you guys noticed, but there was a big, I don't want to call it kerfluffle, but it was just, it was like there was this groundswell of concern in Washington, D.C. and throughout some housing advocacy groups, that people were realizing, oh man, if you take forbearance, I think you've got to pay the entire amount at the end of the forbearance period. Well, that was never the case. It was never a requirement that you had to pay it back at the end of the forbearance period. But it is one of the waterfall options that's available. In fact, it's the first option that is available on the waterfall. But because there was such a hullabaloo over this, the CEO of Freddie Mac, David Brickman, the CEO of Fannie Mae, Hugh Frater, and the director of FHFA, the Federal Housing Finance Agency, which regulates us, Director, is it Dr. Director or Director Dr. Mark Calabria? I think it's Director Doctor is the proper way you do it. Mark Calabria wrote a letter that effectively said, look, if you can make the payment, the full payment on everything that went into forbearance at the time you're coming out, that's great. But we know most people can't, and we've never had it as a requirement. It's one of the things that you can do. So they made that statement so they would calm the markets. You do not have to make all of the missed payments back the moment you come out of forbearance. If you can, that's great. And I'll tell you why that's great in a minute. If you can't, don't worry about it. If you can, it's because what it does is it makes you current immediately. And that allows the consumer to then be able to take advantage of normal refi product, any type of, if they want to go out and purchase a new house, they can purchase a new house, no problem. There's no wait period where you have to make an additional number of consecutive payments before you can avail yourself to some of the standard products we have. But if you can't do that, and that's perfectly fine. If you can't do that, there are other options available. If you look under the servicer requirements column, the second one from the right, all the way down, post forbearance options, what you'll see is full reinstatement, full payment at the top. But then you've got other options that are available to you. And these options have always been available to people. You can come up with some sort of payment deferral, potentially taking all of the forbearance monies and add them to the remaining term of the loan. Of course, that means that your mortgage payment is going to go up slightly to cover all of that. That's an option. Another option is to extend the loan and maybe do a level of modification. And the one thing that we just put in place, and this came out of that, this was the second thing that came out of what was going on about 3.5 weeks ago, is now we have a payment deferral option that doesn't add the monies to your current payments. So you maintain your current level of mortgage payment, but it goes all the way to the end of the mortgage, meaning everything that was in forbearance does not have to be paid until the mortgage matures. So you're either refinancing it or you're selling the property. And that's when you would make up all those payments. You'd have to ensure that all those payments were included in the payout. Those are the things that are available out there to people, and we're trying to communicate that as best as possible. Now, the key is, for each one of those different options, there is a ramification that consumers need to know about. Consumers need to know that if you do fully reinstate your mortgage, then again, like I said, you're eligible for every product under the sun. Standard mortgages, you can do refinances and things like that. If you're on a payment deferral plan, then right now you have to make 3 consecutive payments back to back before you can avail yourself to a refinance or any other product that we offer. It used to be a little bit longer than that, but they've ratcheted it back down to 3 payments because they know people may have some problems coming out of this. So those are the things that we've been really working on to try to to make it easier for the consumer to restart their payments, to get back into this after everything is over. One thing that I will impress upon you, and you'll see this as we begin to go into the next section where I talk about the resources that we have available, is everything is very fluid. Right now, these are the rules. Nothing is etched in stone, I'll say it that way. Because as we begin to move through this period, what we're finding is some of the programs, some of the rules have the best intentions, but if they aren't effectively serving the consumer, we're having to make changes. And aside from making changes for people who are impacted by COVID, by this pandemic, we're still open for business. And we're having to make changes to our current guidance so that we can remain safe and sound and offer the plethora of products that we want to the consumer out there. So that's the forbearance plan. And now I'm going to go into some resources that we have. So you can see those. You can share. These resources are for you. These resources are for any of your real estate professional partners or housing advocacy partners that come through. And some of them are for the consumers that you're dealing with if you want to share more information with them and allow them to see it in a language that they understand, as opposed to talking to the language that we speak on a regular basis in the business. So one of the first things that we did coming out of the CARES Act going into place and we deciding how we're going to attack this whole COVID epidemic was we revamped every page on our corporate website to reflect the COVID breakout. And we've tried to make it easy so that anybody coming to our site can quickly get the information they need, regardless if they are a homeowner or a renter. And on this page, what I'll do is I'll just point out to you one section of it, and that's the gray section that says relief for homeowners and renters. What you'll notice is there are buttons, homeowners and renters. When you're going through our pages on your own, what you'll notice is those buttons are always somewhere on the page so that people can get access to information they need based on their status, whether or not they're a renter or homeowners. And the renter piece is really new for us, and I'll tell you about that in a second. I know it may not apply to a lot of the folks or just any of you that are on the phone, but it's really good to have, especially if people are coming to you as a trusted advisor to kind of talk about some of the things that are going on with them. The other thing I'll share with you, it seems like a lot of people who are renting during this period really don't want to rent anymore and are looking to purchase. So they may be coming to you in droves, but still having some issues with their current situation. So this would be another resource that you can share with them. Currently, we're in a period where, as I mentioned a minute ago, things are extremely fluid. And to illustrate that, I'm going to show you both our multifamily page first, just to kind of illustrate the point of the fluidity, and then the single family page to show you some of the resources that you might find helpful, so that you can understand what we're doing. You can see how quickly we're getting it done, and you can also see that there's a lot of nuance that has been taking place that we're trying to address. So we'll take a look at the multifamily page first. Two things here. The first area in blue that says subscribe, notice on both the single family and multifamily pages, there is a button where you can put in your email address and subscribe so that you don't have to come out to these pages to get information. We'll push the information out to you. Effectively, we'll tell you, hey, something new just came out. And then you can now go to the web page. There'll be a link in the email, boom, you can go and you can see it. So you don't have to seek it out. It'll come to you so you can take a look at it. But the one thing I wanted to show you, the other thing on this page was, this is a snapshot from April 5th. And if you notice, you'll see that in the gray section, we have notifications that have gone out from March 24 to April 3rd. Now, believe me, there are plenty more than that. But just to give you some context, in any given year, on the multifamily side, we may do 8 to 10 notifications of changes to our guidance. If you look at this 10-day period, for the most part, we did 8 changes in that 10 days. And between April 3rd and now, we've probably done another 5 changes just on the multifamily side. So that just shows you how fluid the situation is. It's one of these things where, yeah, we think that our guidance that we put out makes sense, And then our partners in the field say, all right, it made sense, but this is happening, this is happening, this is happening. How do we address these things? And then we have to come out with more guidance. And then that's out there, and we think we've got everything. And then people say, all right, that's great, but what about this? And that's what we're dealing with right now, specifically in this period where we have never dealt with anything this widespread before. That's just on the multifamily side. We'll take a look at the April 5th snapshot for the single family side, the next page. And what we'll do is we'll go down to the bottom section on the left-hand side of the page. And what you'll see down there is it'll say guide bulletins. And our naming convention for our guide bulletins of the year, so 2020 dash whatever number the bulletin was. In any given year, on the single family side, we may do 12 to 14 of these. That's on average, normal year. As of April 5th, when the snapshot was done here, we'd already done 8, 2020-8. We just put out another bulletin earlier this week, Tuesday, I believe, and we're now at 2020-20. I'm sorry, -22. That's how many bulletins we're putting out to help with the situation. That's how fluid the situation is. In that guidance will be everything that we're touching on with all of our products. Any changes that we're making, any tweaks that we're making, changes to income, changes to appraisals, changes to anything to make it easier for you guys to manufacture a mortgage for somebody or manufacture a solution for the issue that the consumer is dealing with at this period in time. So that's under guide bulletins. That's a very important place to go, I would say, for every LO on the phone. You want to stay abreast of the changes that we're making so that you understand the nuances that people that we're dealing with in the marketplace out there. The other place that you want to go on this page is under selling facts related to COVID-19, and that's under additional resources. And the reason that you go there is because we try to address very high level issues in our guidance. Those will be the fundamentals of how we're going to deal with mortgages. I'm going to purchase them, what mortgages we're going to work with, how we're going to, what our investors want. But there are nuances that we can't address in that guidance because that is too in the weeds, if you will. And it's more of, well, this is what we were thinking when we said this was the guidance. You'll find that information out under our FAQs. The key there is, and this just again shows you how fluid it is, when we first started this process, if you would go into FAQs, you would have found 10 questions about some of the guidance that we've put out. We're now up to about 75, 80 questions. And that just shows you that the amount of thought that has been going into every piece of guidance that we've put out there and every question that an LO or somebody in the field has brought up about that guidance. And that's why it's important for you guys to participate in this with us. We only know what we know when we hear from the people on the front lines. Part of the reason that we are telling consumers to speak with servicers, because you guys are on the front lines, you know what they need based on what they're telling you. We need you to share that with us so that we can ensure that the products, the guidelines that we're putting out in the marketplace meet their needs and are effectively helping them get through this. We can't know that if you don't share that information with us. So we're hoping that that what we're doing through all of this is not a one-way conversation of us saying, hey, this is what we want in the marketplace. These are the products that we want to push out there. This is what we think the consumer needs. Now, if that's the case, then we're going to botch this thing, and we don't want to do that. We're pushing product out there, and what we're really doing is taking suggestions from everyone out as specified by those FAQs, from whatever people are saying. If they're sharing it with the Mortgage Bankers Association, the Realtors Associations, if they're saying whatever trade group, if they're sharing it with your trade group, and your trade group is coming back to us saying, hey, look, our folks are seeing this, and we need to make a change. And we're taking all of that, and we're doing our best to make sure that it's addressed. So you want to come to this page, you want to subscribe because you want to get notifications when we make changes, and they're coming out almost twice a week. You want to check FAQs to make sure that any of the nuances that you might be dealing with a specific client are addressed. If they're not addressed, then you want to elevate those to us, either directly by sending us an email. There will be a link on these pages where you can reach out to us directly, or through the trade association that you are most comfortable with, and hopefully it's NAMP. And you can work with them, and they reach out and speak to us on a regular basis. And you can share with us the things that you're running into so that we can make the changes on the fly that we need. Those are two of this page is probably the page with the resources that you need the most in doing your business on a daily basis. This next page I share with you because it actually has information that you can use to understand our thinking. So there is an executive commentary portion on this page. The executive commentary portion on this page specifically has comments from industry leaders and from our folks to kind of give you a feeling of, what are we seeing in the market? Are we seeing it grow? Are we seeing it contract? What products, what products are having problems? Which ones are not? How are we attacking a specific issue? That gives you just some insight into what our thinking is, so that you can understand how we're moving through and developing the tools that we're developing or developing the products, I should say, for the consumers out in the marketplace. More for your internal reference. Now, I mentioned that earlier that Fannie Mae, our sister Fannie Mae, and of course us Freddie Mac, all of these rules, all of this guidance impacts the mortgages that we back. A lot of people don't know if we back their mortgages. So one of the things that we've put out there, and you can pass this along to consumers, and you can even utilize it yourself, is we have a loan lookup tool. The consumer can look on the loan lookup tool, click it, they can put their address in there, they can put the last 4 digits of their social security number in there, and they can tell if their house is owned by Freddie Mac. And if it's not, they can go to Fannie Mae and do the exact same thing. And then that lets them know that they can avail themselves to all of the services that we've talked about, all the loss mitigation products that we can. FHA, or I should say Ginnie Mae, for FHA and VA and US Rural have their own set of rules that are pretty much right on top of ours, but they have some nuances. And then, of course, if the mortgage is not owned by any of us, and it's just some other private investor, they're going to have to reach out to the private investor to figure out how they can take advantage of any of their loss mitigation tools. But I think the message is the same. You still need to talk to their servicer about that. The other piece to this is now, not only can you do this for single family, but now you can do it for apartments, because we back a lot of apartments. So just in case you're dealing with people, maybe this is in your personal life, or you have clients who are coming in thinking about getting mortgages, but they're currently renting and they're in an apartment, but they potentially are discussing the need for some level of relief. On our multifamily page, we now have a lookup tool where you can put the apartment address in it. It'll tell you if Freddie Mac or our sister Fannie Mae own the mortgage behind that. And then there are some things that they can avail themselves to there. We'll go to the next page. And we're going to come to the end of this quickly, because the next few pages are just resources that we have available that are out there in the marketplace. You guys will have access to this deck, so you can go through it on your own. A lot of it is not really information that you're going to find super helpful, except that if you need it, you can push it towards some of your consumers. In particular, on this page, the My Home by Freddie Mac page is really a consumer-driven page. I'll have a snapshot of that in a second. If you have people who are interested in trying to figure out if they've come to you and they're not really ready to purchase, or they're just having a very vague conversation about, do I want to really get into the mortgage process? Do I want to figure out, do I pre-qualify? You can send them here so they can get a better understanding of what all of that means. The other thing is, if you're running into some people who are really having some problems and they're having a hard time in discussions with you, and they really want someone to sit down and speak with them and walk them through some of the different options that are available to them, you can send them to one of our Freddie Mac Borrower Help Centers, and they can talk to a housing counselor there about it. Some people feel more comfortable talking to a counselor than a servicer. Yes, other people, it's vice versa, but that's an option that you can funnel them to if you need to. The other thing is, if you are, and this is something that FHFA with Freddie Mac and Fannie Mae put out just in the last 12 months, there is a repository of all of the different mortgage documents in different languages. So if you have folks who speak Spanish, Mandarin, and they need to be able to read the documents, we've got every mortgage document or every document related to the mortgage process translated. Vietnamese, I think, will be coming online later this year, as will Tagalog. So I would say look out for those things, good resources for you to have just in case. And again, additional information for consumers. The hashtag Help Starts Here page is something that we recently did. It's so that consumers who don't really reach FreddieMac.com, if they're just looking for help in understanding housing, the mortgage process, getting through the COVID-19 problem or a situation related to their housing situation, they can start with Help Starts Here. That takes them to a page that I'll show you in a second, and then that allows them to then back into all the other information that we have. This is a copy of that page for you guys to take a look at. Again, you'll have all of this available to you after the session is over. Should you want it, you can reach out to Audrey and they can make these slides available to you. We've already talked about that. And this is the page I was talking about, the My Home by Freddie Mac page. The one thing I will say that we've done to help consumers throughout this process is we've taken a lot of the written stuff and we've made little video vignettes. So you don't have to go through and like everything you click on, you don't have to sit there and just read. We know that's extremely intensive, and based on some of the conversations I've had with people about housing policy, our guidance and things, it puts them to sleep really quickly. So what we want them to do is be interactive, to actually be able to take in the information, to digest it, to understand it, take it at their own pace. So we've tried to make the information for the consumer as easy and seamless as possible. And this is one of the pages where we've done that. So I'm going to quickly go through the next two slides. I think my thank you slide is coming up in 3, and then we can get through to conversation. 4, this is our translation page. There we go. So at that point, I'm going to stop. I know I've talked a lot towards you guys, at least 40 minutes. That's a lot, probably about 10 minutes longer than I said I would. I'm sure you're tired of listening to this, and you probably have some questions that you want to ask, and I will do my best over the remaining 50 minutes to answer your questions. Thank you guys for paying attention and taking time out of your day to hear about how we are addressing this situation. And I hope that the one message that you'll get, aside from us telling the consumer to talk to you guys on a regular basis, is that we need your help to make sure that we're doing everything possible to effectively service our the population at large. Thank you.
Gosh, thank you so much, Tony. That was amazing. And really, I want to say thank you to Freddie Mac, because I've been struck through this whole thing that you really have been proactive and really focused on keeping homeowners in their homes. And I think you're smart to include second homes and rental properties. I mean, why would we want anyone to go into foreclosure who doesn't need to?
Yeah,
if there's some way to help them in the short run, why wouldn't we do that? I wondered that through the meltdown. I swear, when you said, Freddie Mac lookup tool, I had PTSD symptoms taking me back to 2008, 9, 10. It was.
Yeah.
It is so important to keep people in their homes. And so thank you, really, for being forward thinking, being open to all of our input. Thank you for taking my calls, because I know that I'm a handful. And I will say that it's just nice to know that you're an organization that is you're really focused on the homeowner ultimately. So thank you. Next time, maybe we think through the potential volume a little sooner, and have an idea for helping the servicer up front. But other than that, you guys did great, right?
I know, right? There's always something. There's always a piece. There's always one piece.
Right. So anyway, I mean, and who would have known, right? The whole thing was so crazy. So we've definitely all been pivoting our brains out. And I mean, we're doing 2 to 3 webinars a week just to keep people up to date with what's going on. And And we didn't even get to, any of the Freddie Mac other stuff. So we'll do that again
Yeah,
down the road in a few months. And thank you for always being there for us. So
absolutely.
we have a number of questions. So let me start with, so how long, so you said, and I didn't realize that forbearance never required documentation. I didn't know that. Is
Yeah,
that what I heard you say?
that's exactly right. So if anybody calls a servicer and says that I am impacted by COVID-19 and I
Yep.
want to take forbearance, they get it willy-nilly.
Yeah, I didn't.
No documentation at all, and that is specified in the law. Now, the one thing I will tell you guys, and this is another reason we've been telling folks to really sit down and talk to their servicer, is that you've had people call up to a servicer and say, "Hey, I want to talk about forbearance. Can you tell me about that?" And they never commit to taking the forbearance, but for whatever reason they've got it. So
Oh
there have
yeah,
been
that's happened a lot.
instances, yeah, there have been
Lot.
instances where consumers say, "Hey, I just want to talk about it. I want to figure out
Yep.
what is this thing." And next thing they know, they go to make their next month's payment, and the system is shut off for them because they're
Right.
in forbearance. So, that's why we've been telling consumers, you really have to have a conversation with your servicer. Let them know what you're thinking and why you're thinking it, and allow them to tell you the different options that are available to you. Now, one, you want to protect yourself, but two, you don't want to get into a situation where, maybe you've taken on something you didn't really need to take on.
Right. I think in the beginning, especially, I think that the servicers were so taken off guard by the sheer volume of
Oh yeah,
calls they were getting. They probably had janitors answering the phone. And I don't think that a lot of the people who were taking those calls had answers. And I think it all evolved. So I think it's getting
yeah,
better. And,
yeah.
everyone's doing the best they can do. But we are definitely hearing stories, a lot of
Oh yeah.
stories about
Well,
people who are put into forbearance
yeah, and
without
to get
even
to
thinking.
that, part of it was that, I know our servicers in the beginning, similar back in '08. You're right, they were overwhelmed, didn't really think that this was going to blow up the way it was. So kudos to them for really ramping up, bringing people back on,
Right.
starting up their loss mid departments to handle this. But they also reached out to us and said, "Hey, can you give us a script in just plain English that we can have some of our people, because we're bringing on people now to handle this that may not be as well versed, and we don't want to cause any more issues to the consumer. So can you come up with a script?" So between Freddie, Fannie, FHFA, mortgage bankers associations, you guys and a number of other, we drafted a script that we have then pushed out to all the servicers out there so that they can, they've got something they can read from when people call in and say, "Hey, look, I'm having some issues." And you can say, "Okay, well, let's go through and figure out what you need." And we think that has helped out a lot of people. So,
Right. So the guideline change from 12 months payments after forbearance to 3 months, how long will that last?
so right now, that's a good question. So right now, we don't know. It is a temporary, and
Okay.
it's funny because temporary uh, it sometimes means month to month, or every 3 months we renew. This one is in place until the end of the pandemic, and then it'll be reviewed then thereafter. So right now, you still have the national emergency that's out there. When that's
Right.
over, then we're going to sit back and say, "Okay, well, how long do people need it after this?" And that's
Okay.
when I think you're going to find out whether or not we're going to make it more permanent. Is it going to be, extended for a year? But that is up in the air right now.
Okay.
But I will say this: it's not being thought of. So that is
Okay.
something that all of the major industry players are currently, it's on their minds. They're currently discussing it as we continue through this. There are not even monthly call, weekly calls with industry folks on issues that are out there. So
I have a great idea. I think that on your renter button that it should be a direct link to a camp member LO who can help that renter become a homeowner instead. Isn't that a good idea, Tony? Yeah. Okay.
I
Take that
think
back
every
to
idea that you come up with, Audrey, are extremely good, and we must consider them.
That's smart. Smart of you. Okay, so we have a bunch of questions. So we have a couple of very specific underwriting questions, which are really interesting to me. My question is, can you answer something like that, or should I run it by you, or are they better off going to that FAQ page and trying to run it through there?
I would say first go to the FAQ page. There's extremely specific ones. And the reason I say that is because I'm more than positive that we've addressed it with everybody that's come in. I'm not an underwriter. I'm not an underwriter. I'm a public policy guy. So I would go there first. But the key is this.
Tony.
But the key is this. If you don't see an answer to that question under those FAQs, make sure that we get them. You can send them to me. So one, I can run them to the company so that they can be addressed, and then I'll get you an answer, but also so we can include that in our FAQ.
Perfect. Okay, so really to the people who sent in very specific underwriting questions, will you send me an email, please? And then I'll make sure that they get to Tony if you don't find them on the FAQ. If you do, send that to me. I'd love to see it. So, okay, because we're going to run out of time very quickly. The people are concerned about foreclosures in the horizon with the and defaults coming up. Are you guys thinking ahead on that? I'm sure you are. And what are your thoughts on how to manage that?
So, we're hoping that some of the tools that we put in place, modifications and extensions, forbearance plans with payment deferrals that come at the end, just adding on pay, we're hoping that that's going to reduce some of the people that are going to go straight into foreclosures. But yeah, we are thinking that there are going to be some, and we're not just hearing that, we're not just thinking that. So that's coming from real estate professionals in the marketplace. It's coming from some of the larger servicers that are out there. Everybody's really beginning to think this. If we are unable to get the economy started, and we're unable to extend some of the policies that we've put in place, we're going to end up having some foreclosures. And the one thing I will share with you right now is we're at an all-time low for REO in our books. I mean, an all-time low. And we'd like to keep it there. We don't want to see REOs go up. So the first thing that we're doing is we're trying to make sure that we use every tool that we have to keep people in their homes, unless you're not going back to work, right? And then what we're hoping, because we just had conversations with some of our realtor friends, maybe short sales need to come into play. We don't want to see people just give up on their homes, lose them, and we take them back. That doesn't do any good for us. Doesn't do any good for the communities. Doesn't do any good for them. So it's kind of interesting that you folks mentioned that, because I just had a conversation with the National Association of Realtors that wants to restart some education they had around short sales, because they're feeling the same angst.
Right, they are starting that. I've seen that actually. But again, with rents so high, I mean, everything we can do to keep people in their homes should be our first order of business.
That is the first order of business for us. And like I said, it doesn't help our investors. It doesn't help us if we have to take properties back. And we saw what happened in 2008 through 2010. The numbers were just abysmal and heartbreaking, and we don't want to go back to that. We truly don't want to go back to that.
We're in, both of the Bay Area and San Francisco area, and we're not seeing any down in values in homes. They're holding steady. We're still seeing multiple offers on homes. My phone's ringing off the hook with new pre-approvals right now, and we're seeing, basically what happened is the spring buying season just got pushed back a few months, and it's hot and heavy. Is that going on across the country?
So that's what we're seeing on a national level. I mean, I know every market is different. There are going to be some markets out there that aren't going to experience that are going to have some declines. But overall, our economists believe that we're going to see no more than a 0.5% decrease nationally in values. So that means everything is pretty much holding up. And they're looking at this year and next year being the same amount in terms of overall mortgage generation. This year being more of a refi year, and next year being more of a purchase money year, but both about the same level, $2.9 trillion of business. So, right now we're like cautiously optimistic that the market is going to maintain a lot of the confidence that it had rolling into this prior to the pandemic, because we've not seen large scale fall off. And I'll just share, a personal experience. I just refied my house to the lowest insurance rate and interest rate ever, and I was able to take cash out. And my house has appreciated over the last 6 months, another $70,000. So, and there are people selling in my neighborhood like hotcakes. There was a house up the street that just went in a matter of 2 days, and that's what we're seeing now. Like I said, every market is different. I know the DC metropolitan area is different from which I might find an hour and a half away in Richmond, which is similar. You might find San Francisco and Oakland wholly different from, I don't know, up in Sacramento. But on a national level, things seem to be steady. That's what our economists are seeing. Yeah,
we're seeing the same thing. So just wanted to say a quick thank you to Steve Mannings for renewing his membership today. He's on the call. I just want to quickly, and we are so almost out of time, but we have noticed that the guidelines seem to have tightened up. LP has tightened up, and so people who were getting approved a few months ago are not being approved now. Can you speak to that, like in 30 seconds or less? That'd be great.
Yeah, so we've been hearing that from a lot of different people, and I will just say that as we go through this exercise, there are a couple of things we have to continue to do. So one, we're doing our best to keep people in their homes as best as possible, and then with new product and things that are out there, we also have to meet our safety and soundness guidelines. And if the market looks like it's getting a little tighter, then yeah, that's because there's some things that may be occurring that might be pushing us towards an area that we don't want to be. But at the same time, what we don't want to see is us choking off the market. So as we're trying to have a nice balance there, this is where you guys really come in. You have to let us know, are you seeing sales plummet? Are you seeing people like not be able to get houses? And that looks like not just those folks, but there's no one to backfill them, right? So let us know what is happening, so then we can then, maybe that tolerance change that we needed was too tight and we have to go back the other way. But we're constantly doing that. That is something that you're going to see throughout this process. And when this process is over, you're going to see it. We go through these things, we go through these changes where sometimes we can look and we can open that spigot a little bit more. And then sometimes we have to try to tighten it up. And we're trying to do that in a manner that doesn't adversely impact the market. So yeah, are we doing that constantly? Yes. Do we hope that it has the changes that you guys are talking about? No. Let us know what you're seeing, please.
Okay, so like in that regard, do we give you specifics?
Yes.
Like we give you like actual cases and then share those with you? Okay.
Yes.
And
you don't have to tell us personal information about the people. It can just be a very general information. I had a client who looked like this, and this. A month ago or 2 weeks ago, I had a similar client. They got approved. Now all of a sudden they're not. Why?
Right. Or these people were approved 3 months ago and today they're not.
Yeah.
Yet they have X, Y, and Z, and why wouldn't they be? Right.
Yeah.
Okay.
Yeah, the situation has improved. We think it has improved, and now all of a sudden we're not. What has been the change that has occurred? Some of that you're going to find in our guidance. Some of that you won't. But again, let me know.
So we're going to have you back. We are out of time, and there are
Please.
so many things we didn't even get to. So we're going to figure out a way to get your links on our website too, so people can easily get to you through our website. That it looks like one heck of a resource. So thank you so much, Tony. You are the best. I'm very proud of myself. I didn't grind you on your LLPAs and algorithm this time, so you're welcome for that.
I know that'll happen over drinks sometime.
Oh, you know it will. So anyway, and to everybody on the call, we'll send out the deck. And if you have questions that we didn't get to, will you let me know? And we'll get them answered for you. And again, we'll have you back. Thank you, thank you, thank you. Have a great day, everyone.
No worries.
See you at 5 o'clock for happy hour mastermind brainstorming session. Bye, everyone.
Bye now.
Thank you, Tony.
Bye.
Thank you, Tony.
No worries.